what we're looking at right now are these kind of topping candles, and it's pointing to potential downside for gold, silver, and miners for a few months. The stock market might go into a big sell-off. It's going to pull gold down. But after that, we're going to see this head up. I think it'll be $2,700 gold and beyond. And this type of bear market that I think we're about to go through could be very similar to what happened in 2008. We see gold pull back with the bear market. It bottoms before the stock market and it takes off and has a huge, huge move. So that's what I'm seeing in the precious metals space. And this is the monthly chart. So we're still potentially 3, 6, 8, maybe 12 months away before all this kind of comes to fruition and plays out.
In a recent interview with Palisades Gold Radio, Chris Vermeulen, chief market strategist at the Technical Traders, shared his insights on investing in precious metals such as gold and silver. Vermeulen believes that when the stock market is not performing well, it presents a favorable opportunity to consider investing in these metals. Vermeulen explains that during the late stage of a bear market, gold, silver, and mining stocks tend to regain their strength and exhibit positive signs. He sees this as the potential beginning of a significant upward movement in the prices of these precious metals. This is because people often consider precious metals and miners as a safe haven and defensive play when they feel nervous about the stock market. This contradicts the typical behavior of the stock market, which tends to increase when people feel confident. Vermeulen also emphasizes that there may be temporary drops in the prices of gold, silver, and mining stocks. He explains that if the overall stock market experiences a significant sell-off, it could negatively impact the price of gold. However, he firmly believes that following this initial decline, gold will begin to rise again and potentially surpass a price of $2,700 or even higher. Vermeulen further highlights the influence of the dollar on the precious metals market. He expresses his expectation that the dollar will strengthen, which could pose some challenges for gold. During stock market downturns, people often shift their investments to robust currencies like the dollar, potentially exerting pressure on gold. However, Vermeulen acknowledges that gold has proven resilient due to its perception as a stable and globally recognized asset. Now let's watch clips from Chris Vermeulen's interview with Palisades Gold Radio. Please make sure to watch the entire video and consider subscribing to our channel. Don't forget to turn on post notifications so you never miss any upload of ours. Thanks and enjoy the video.
The nice thing about this is when we're in this late stage of a bear market, this is usually when gold and silver and miners come back to life. And I think that is going to be the start of the next major leg higher in precious metals. And the gold chart is really a really powerful looking chart. When we look at it, if we take a look at the gold chart, and especially if we go to the monthly, I mean, I'm really excited about the precious metal space. I've been waiting for this next major super cycle to happen. We have a very similar setup that we had right back over here. We kind of had that unfolding right here. And you could argue we're almost kind of still in that phase. But what we're looking at right now are these kind of topping candles. And it's pointing to potential downside for gold, silver, and miners for a few months. But if the dollar, I think, really rips to the upside, I think it'll be too strong of a force for gold to rally with it. Now, there might be some crazy play. I mean, obviously, we've had a bit of a banking crisis this year. That sent gold higher. People are nervous to put their money in the bank. I mean, you're only insured for like 200 or 250K, which isn't very much for somebody with a large bank account. So people have been moving into precious metals as a physical asset, so they actually have something tangible, not just some zeros in an account that can vanish overnight. But I do think we're going to see the dollar come back up to these highs that we saw back in 2022, and maybe it's even going to blow off and go even higher to what we saw back during the last kind of super cycle, where precious metals put in a major bottom, the dollar put in a top, and as the dollar sold off, gold and commodities just screamed higher. So I do think we're going to get back with a high dollar. Typically, when the stock market sells off, we see the dollar rally. People cash out, they move to a strong currency, a country that they feel like is going to recover. And I think that's going to send the dollar higher. And it'll put a lot of headwind on gold. Maybe gold will hold up well. And that's why gold probably has held up very well, is actually because it's a global asset. I mean, you look at gold, it's trading right up here near the highs where gold miners are down like 35, 40%, so are silver miners. They're just not performing the same. And that's because gold is a slower moving asset, so it's more stable. You can put more money in it because it's not some crazy yo-yo. And the whole world moves into gold as a defensive play, whereas I see gold miners and silver miners more specifically being an aggressive speculative hedge of kind of the buy and hope it's going to go to the moon, which eventually it probably will. But that big money isn't really flowing into that sector yet. It's, gold's holding up really well because it's a global asset. You can use it kind of to replace a bank account to some regard, because it's a slow moving asset and it's physical versus a digital in the banking space.
During the interview, Vermeulen also highlighted the concept of revesting. This means reallocating investments into the assets that are performing the best at any given time. Instead of just buying and holding a particular asset for the long term, revesting allows for adjusting investments based on market conditions and investing in assets that show strong performance. For example, if you have invested in a stock that has been performing poorly, you could sell that stock and reinvest the proceeds into a stock that is performing well. This process of rebalancing your portfolio can help you to maximize your returns and minimize your losses. Revesting is a more active investment strategy than simply buying and holding assets for the long term. However, it can be a more effective way to build wealth over time.
Here's the interesting disconnect. So when the stock market was out of favor on the bottom saying, hey, don't own stocks, we saw gold miners move up. And then as soon as the stock market became favorable and people piled back into equities and into tech, into growth stocks, everybody moved out of miners, doing the complete opposite of what the stock market more or less is telling us to do. Same thing happened. Stock market was out of favor. Gold miners led the way. They ripped higher. And then the stock market became favorable. Everybody eventually moved into growth stocks and out of the miners. So the complete opposite of what the market is doing. So when people are nervous in the stock market, they're actually finding precious metals and miners a safe haven, a defensive play. I think a lot of people see a recession around the corner. And once this level breaks, I mean, we're going to see oil, I think, slide, very easily. It could drop right back into the 35, 40 range when you look at this chart pattern on the monthly chart. So I do think oil is on the verge of moving lower. It kind of had its blow off phase, and precious metals is kind of that last one. Gold is trading up near the highs, on the verge of pulling back with this as well. So I'm pretty bearish on the energy space here, because when the bottom breaks, when this level is broken, oil is going to fall very quickly. Energy stocks, I think, are going to get hit really hard. So yeah, we use a lot of different ways to analyze the markets from a technical standpoint. The markets, I mean, there's intermarket analysis. Everything is kind of related or linked in a way. If something moves, over here, something else moves over here. And so we use a lot of price analysis. We use a lot of intermarket analysis, like how is gold moving? How are utilities moving? How are bonds moving, or currencies? And depending on how all these are moving in relation to each other, it tells us if money is flowing in or out of risk on, risk off assets. So that's kind of one way. And then we look at the price charts as well. And so when the price charts on different time frames start to lose their upward trend, they start to go sideways. And then we see the intermarket analysis breaking down, meaning there's big money's rotating out of the stock market, for example. Then our strategy will be like, okay, listen, the technicals are now weak, and the underlying kind of strength, the breadth of the market is also weak. This is telling us to get out of the market. Up with this term asset revesting, because there's multiple different assets. You've got stocks, that's one asset class. You got bonds, it's another. You've got currencies. So there's all kinds of different assets out there. And then I call it revesting because we're reinvesting our money into whatever asset is performing best. And so you won't catch us buying and holding anything. What we're doing is we're looking at our hierarchy of what assets are performing best. We want to move into the best one. So we'll reinvest our money in the equities, which is what we're long right now. Once we get a sell signal, we'll be reinvesting all that money into potentially the US dollar and different things like that, right? So that's how I see it. Investing is just long-term. You leave it there to kind of decay or rot and kind of, hopefully be higher when you need it. versus reinvesting is moving it into the best asset at any given time.
The stock market is currently in a state of flux, and it is difficult to predict what will happen in the future. However, a few factors could contribute to a decline in the stock market, such as rising inflation, rising interest rates, and an economic recession. If the stock market does decline, it could present a favorable opportunity to consider investing in precious metals. Do you agree with Vermeulen's predictions about the stock market and precious metals? Please share your comments and observations in the comments section below. Additionally, if you found this video informative, don't forget to give it a thumbs up, subscribe to our channel, and enable notifications to stay informed about our latest videos on silver, gold, and copper. Thank you for watching, and we appreciate your support.